Many of you know that follow me closely that there was a deficit between 1990 and 2005. 15 straight years where we ate and ate and ate and ate and ate the above ground stockpile.
The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the weekly perspective for the week ending 21 February 2025. There's been so much in the news, especially around the looking into Fort Knox, and I did an interview with ITM Trading, Daniel Cambone, yesterday. It should be posted maybe later today, Friday, or Saturday, or early next week. I'll put that out to our blog, and I'll put it on our Twitter feed as well as our YouTube channel. So having said that, I'm not going to talk much about the Fort Knox audit. So much has been said, and everything I really wanted to say is in that interview. So moving on from that, so what I'm going to do for this weekly perspective is talk about what the Silver Institute put out a couple days ago. And that is, this is a summary that we're looking at. A new report analyzes the complexity of above ground silver stocks. And there's some bullet points here. And if you use my Twitter feed or find it on your own at the Silver Institute, you can get this. You get the whole report by clicking here. There's a hot link and you can get the whole PDF file. I just downloaded it. I have not read the whole thing. But I think some of these bullet points are very interesting. And many of you are probably going to be, let's say, triggered maybe is a good word, relative to what some of these high points are. But first one here is, there's no correlation between the overall level of above ground stocks and the silver price. Now, a lot of people are going to say that's hogwash. I believe it. And why? It's because of my daily activity, basically, in the precious metals and, of course, the resource sector and other things I do, but focusing primarily on the precious metals, particularly silver. As many of you know that follow me closely, that there was a deficit between 1990 and 2005. 15 straight years where we ate and ate and ate and ate and ate the above ground stockpile. And that's in the news now because we've had 4 straight years of eating the above ground stockpile. 4 years. This went over 15 years. And what happened to the price? You can look. I've showed it in previous videos. You can look it up or find it on your own, or maybe I'll do another update. But basically, the price stayed flat. The price peaked in 2011, which is when the inventory started to build back up from 2006 to 2011. So 5 years as inventory was building is when the price actually continued to go up. So if you're looking at history, that statement's correct. Annual changes in above ground stocks and the silver price is likewise uncorrelated. This is the mystery of the silver market, but that's true as well. In contrast, movements in bullion stocks have an impact on the silver price and vice versa. I haven't read a report. I'm assuming like maybe moving from London to the COMEX may have an influence. The vast majority of above ground stocks are immobile, with only a small net additions or subtractions from stocks on an annual basis. That is true. Most of the industrial silver goes from the refiner direct to the user, direct to the manufacturer, does not pass through COMEX, does not pass through the LBMA. It goes from refiner to 3M, Tesla, Apple, Dow Chemical, DuPont, you name it, the big users. Increases in bullion stocks are often positively correlated with the price. As investment demand grows and silver prices increase, which stimulates higher prices. Again, going back to what I said a moment ago, the above ground stocks have grown from 2006 through 2002, 2020, 2021. So many years of an increase in above ground stock, yet the price peaked again in 2011, as we all know, but it was peaking as the increase of above ground stockpiles was increasing. So a lot of this stuff just doesn't sound right, but this is the silver market. Multi-year drawdowns in stocks have tended to occur in bear markets for silver and have exacerbated these. However, these drawdowns have typically set silver up for more substantial rallies as investors have rebuilt their bullion holdings. And then the last one, bullet point here, above ground stocks of fabricated products are less price sensitive than those of bullion. Only specific subsets of fabrication demand show a sensitivity to the price, such as jewelry or silverware. Of course, we know that. Silverware is going to, it's a market of its own, maybe 4% of the total market. And jewelry is a much bigger percentage, but like gold jewelry in the West, there's huge markups on gold and silver jewelry. In Asia, that's not so true. It's usually pretty close to melt in most of the Asian countries, not all. India is that way. And of course, there's places where there are huge markups depending, but generally speaking, huge markups in jewelry in the precious. Again, as I said, the complete report can be downloaded. They give you the hot link here. And this reminds me of an institute, Silver Institute study that was commissioned by them years and years ago. I'm going to have to guess, probably in the 90s. It was commissioned by two Charles Rivers Associates, and I bought it. I have it. I have it in my bookcase back here somewhere. And what they did was they looked at how much silver had been lost, and also the above ground stockpiles and what price mechanism or what price levels would have to be achieved to start bringing out silver, especially silver that was in non-investment form, like silverware or jewelry or whatever that could be smelted and re-refined into 999 fine commercial bars. It's a very fascinating study. I don't have the numbers in my head, so I won't misstate it, but it was a higher price than I thought, according to them. And also the other part, and I'm going to shout out to James Anderson, and I forget who he's interfacing with. He tagged me and said, David probably knows a thing or two about recycling of silver, and I do. And so this study, as Charles Rivers Associates said, how much silver had been lost. It's a huge amount, huge. And, it's an estimate, an educated guess. I'm not going to argue with them. It was a big number. Having said that, the late, great Jim Dines, who wrote the Dines letter and was instrumental really in getting me into this business, because I just admired what it was, what he did, and many in the group. I was certainly a hard money advocate before I even knew there was such a thing as a newsletter industry. But coming back on point, Jim Dines said years ago that silver and gold would become so scarce and so difficult that the waste areas, the refuse dumps, would be mined for their metals content. And I remember reading that the first time years and years ago and kind of laughing a little bit. I took pretty much everything he wrote fairly seriously, but that's the point. And this back and forth between James and someone or someone else's, I give you credit, I can't remember. Is that possible? You bet it is. There's a lot in the e-waste field. That was the number one question I got when I went to China and met with the Mining Bureau and some of the investment banks in China that were silver savvy. They were really pinning me down on how do you recycle everything in the silver world. And of course, we don't. A lot of it ends up in landfills. So I think I'll just make that comment. Thanks for the shout out, James. Thanks for all the help. I was just thinking about it before I sat down for this, and all the people that are now involved in the silver world and precious metals and finance and truth and all that. But going down to the subset of silver only, I mean, basically way back in the early 2000 or 1999, I mean, it was Ted Butler and me, as far as I could tell. And I reached out to Ted, and then I met Ed Steer, and Ed's been at this probably as long as me, maybe not publicly, but privately. And, so many out there that have contributed and helped me, found stuff for me. I mean, Mike Maloney, I could name them all. I don't want to leave anybody out, but I want to thank you all. And I think the community is very cooperative most of the time. We just don't agree on everything. I don't think I agree with everybody out or anybody out there 100% of the time, but that's okay. Steel sharpens steel. It's good to be challenged, or where'd you get that data, or can you verify it, or is it hearsay or whatever? And it hopefully sharpens us all and makes us better. So enough. I just wanted to show a little level of gratitude. Certainly, my work has gotten better because I've gotten some great help and people that have helped me when I've asked for stuff I couldn't find easily or whatever. So I'm yakking on. I'll leave it there. Take a look at this study if you are a silver bug. I think it'll be a bit of an eye opener, especially those bullet points, some of them that I read that just really don't seem to make common sense. But again, it's the world of silver. I'll be back with you next week with another weekly perspective. This is David Morgan of themorganreport.com.